Well, why don't we get started? Why don't we start first by inviting you each to introduce yourself. Steve, why don't you go first? Tell us who you are.
My name is Steve Grizel. I'm Managing Director at UTFC. We invest in early growth stage companies, primarily here in Utah, exclusively in the Rocky Mountain area.
And you are also involved with Mountain West Dealflow Committee. You chair that committee, is that right?
I do. I co-chair that actually with Brad Bertosh, and we produce an annual report that is an overview of M&A transactions, venture capital, private equity, and other transactions. Tries to be comprehensive about activity within the state of Utah.
You're also the chairman of the Utah Valley Entrepreneurial Forum, is that right?
That's correct.
Excellent. Now, Joe, tell us who you are.
I'm a manager at the Salt Lake City office of PricewaterhouseCoopers, and I also am an officer in the Mountain West Venture Group.
Excellent. Well, we wanted to get together and talk a little bit about Dealflow because you two are kind of the Dealflow gurus for Utah. And I thought it would be helpful to have the two of you together to visit about some of the things you're seeing. First of all, Joe, why don't you summarize the MoneyTree report data for Utah?
Okay. So one of the things I do at PwC is I do the MoneyTree report, which tracks just venture activity in the state of Utah. It doesn't track bridge loans, recaps, IPOs, or anything of that sort. It's just
No
venture,
M&A.
no M&A, just venture activity. Particularly, I'm over Utah and the Mountain West, but it actually is throughout the whole United States. It tracks that activity. And so we just released the second quarter report for Utah and the U.S. And Utah was down a little bit this quarter from other quarters. We had a total of 21 million in venture infusion in Utah this quarter that was tracked, compared to about 60 million in Q1, and the 21 million was done in 4 deals, I believe. So
Excellent. You've got the list of the 4 deals there. Why don't you read them to us?
the 4 deals were, so it was iArchives, which was funded at approximately $2 million, computer company, computer and peripherals. Then we've got Oakley Networks, which was at $12 million, which was the largest deal in the state for the quarter. Then we've got Vision Bank Card, which was at $7 million, and then Linux Networks, which was at $400,000. And those last 3 were all in the software industry. So we've had everything that was tracked for Q2 was in the computer or software industry. There was nothing in the in consumer products or the pharmaceutical, or even some of the other industries that we've seen historically. We've seen some activity in the state. We didn't see any of those in second quarter.
Well, what do you think the third quarter is going to look like, Joe?
That's a tough question. We've historically, for the past couple of years, really stayed in a range of 20 to 60 million as it relates to the VC activity for each quarter. We have had some quarters that were significantly above that, where we've had some big deals. I think we've had one quarter at 103 million, another quarter at 90 million. But generally, for the last 3 years, we've been in that 20 to 60 range, which is a pretty healthy range. So if I was to lay a bet, I would say it'd be somewhere in that range. But we get one of these large VC deals at 40, 50 million dollars, which we've seen from time to time, about 1 or 2 a year in the state. That could skew those numbers.
I'm going to stick my neck out here a little bit and sort of build on Joe's last answer, which was, what do I see for Q3? And I'm going to stick my neck out and predict that overall, when the reporting settles down, that M&A activity will be up this year from last year. And I think the reason is that continuing trends of the public markets have been so sucky, I believe is the technical term, and there's a lot of capital, and companies, the venture-backed companies are more likely to be exiting through an acquisition than they were going public, compared to historical information, and I think that trend's going to continue because we haven't seen any real improvement in the IPO segment nationally. So I'm going to take a bet that M&A will continue to be robust here in Utah, and that 2006 will exceed 2005.
The recent data suggested that venture returns are up across the country. Are the
From negative, you mean?
Well, in recent years they have been negative. Are we seeing that kind of same pattern in Utah, that the venture returns are improving a little bit?
I don't know. Again, people are pretty closed with what they're doing. My sense of the matter is that there is a lot of capital at play in the markets, and it may be depressing term sheets, and it may be inflating valuations. So we could actually, yes, I think as an entrepreneur, it's a good time to raise money. And I don't know to what extent you're seeing some sort of food chain stuff. We hear the hedge funds have really hurt the mezzanine funds and the sort of later stage funds, and that those guys may be moving into earlier stage deals than they would have historically, just because they're being outcompeted in the big money deals at the mezzanine level. On the other hand, you also see the continuing trend of venture funds are getting bigger, and so the competition at the early stage is probably lower than it was historically. There's less people trying to put to work, $1, $2, $2.5 million deals.
Yeah. What about this Utah Fund of Funds? You got $100 million coming into the marketplace. I hear rumblings of out-of-state funds setting up offices here, trying to link in and access that capital. Is that going to really drive some new increase in venture deals, do you think?
I understand they've invested in 5 funds, one of which is a local fund. I don't know who the other 4 are, and so without knowing the names, it will be hard to say whether or not the types of deals they're looking for, how common they are in Utah. I think that's always been the issue, Devin, you know better than I do, is that particularly in the M&A area, the deals tend to be too small to attract a lot of outside attention. And whether or not the venture funds will have that same issue, that the deals are too small here.
If you got $1 billion fund, $5 or $10 million from the Utah Fund of Funds doesn't move the needle. It doesn't drive much change.
I think things are developing well. I think the Omniture IPO was an important step in the evolution of financing in Utah, particularly since it's still positive from its opening price. It went public at $6.50. Last I looked, it was about $7, and that's over a month since it went public. So that's a good sign. We'll see, 90 and 6 months out. And I also see investments, the sizable investment that Hummer, Windblad, and Trident made in Infopia as another good sign of out-of-state interest in Utah-based companies. The Oakley deal, I'm assuming, was again involving Kleiner Perkins, who was in that deal on the last round, which is top-tier venture here in Utah. That I think is significant in that the industry continues to evolve, meaning the entrepreneurial industry, the people of starting new ventures, and that's being recognized and the money's following. Got to have the deals first and then get the money.
Excellent. Well, guys, thank you very much. I really appreciate you taking some time to be here. Appreciate your willingness to help out.
My pleasure.